Hi, everybody. Welcome to our Achieving a Better Life Experience, the ABLE Act. And Andrew is going to be guiding us through this segment this afternoon. My name is Kathy Diane. I'm the Executive Director for the Autism Society of Maine. I'm happy that you're all going to be joining us today. One of the things that I might be doing, and you'll have to excuse me, I got to keep letting people in. So you'll see me keep looking to allow people to join us in this room here as we continue. So Andrew, I don't know if you want to wait just a few more minutes just to make sure, or do you want you want to start and I'll just keep letting people in?
Yeah, well, let me pull up the PowerPoint and get that shared and go in a minute. Okay. That looks correct. It's the right screen. Okay.
Yes, I can see it. We do want to let you know that if you guys have participants that are online right now, if you have questions that you want to ask during this presentation, Andrew does like to have people ask the questions, dump them into the chat box, and I'll make sure that he gets to see those questions or we can answer them. And we also are going on Facebook Live. So this is also happening on Facebook Live. So hello to all our Facebook friends. This will be recorded and you'll be able to review it and see it at another time if you do have to leave during the middle of it or whatnot. So I'm happy, Andrew, for you to join us. Why don't you go ahead and introduce yourself to everybody?
My name is Andrew Komarow. I am a certified financial planner in Connecticut. I have a few letters after my name. Actually, I think I need to update this. I have even more now. And I've been doing a lot of talks on ABLE accounts. I am in Connecticut. Connecticut just got theirs. So very much like Maine, I saw that there was a lot of not people looking for information because the state didn't have one. So I basically went on tour just trying to help as many people as possible open up ABLE accounts. I was an ABLE ambassador with the ABLE National Resource Center for 2020. I have my own ABLE account. I am autistic as well. So it's my passion to speak about this. So what I found too is that in order to talk about ABLE accounts, I had to talk about, well, why should you open one? So we start the presentation with a little bit of some public benefits, very basic overview. That's one of the main reasons that we really look to consider ABLE accounts. I talk about ABLE accounts. I'll give options for my opinion, the two best state options that you have in Maine in order to open one. And then I do a little just comparing and contrast to special needs trusts. So I try to make it fun. If anyone has any questions, after this, again, please let me know. I've helped individuals open hundreds and hundreds of ABLE accounts. I'm really happy and proud about that. So the more I can help people open, the better. So again, this isn't a complete government benefits presentation, but when I started doing this and I just wanted to help people open them and walk them through the process, there was a lot of questions as to why. Why should you open an ABLE account? And although there can potentially be other reasons, one of the main reasons is to protect government benefits from a $2,000 asset limit. And so brief overview, I break it into 3 sections, going to go over the first 2. So there's Social Security disability. There also, the government really uses fun terms for everything, right? Disabled adult child benefit, that falls under SSDI too. That has no asset limit. You can have $10 million and be on SSDI. That's income. SSI is something everyone is eligible for. You didn't have to work. A parent did not have to work. And that SSI is the gateway to Medicaid. And Medicaid is the service that also provides waivers and lots of other things as well. So SSI is important for Medicaid. There is income and $2,000 asset limit. I like to compare and contrast, again, SSI and Medicaid. They are very similar. When you apply for one, you automatically get both in just about every state in the country except Connecticut. So it's nice that it's simpler over here. And then there is, yeah, an ABLE account doesn't reduce income. It only shields assets. So that $2,000 limit, an ABLE account means that limit, you can have 50,000 in an ABLE account. Social Security disability and Medicare. After 2 years of Social Security disability or the disabled adult child benefit, an individual is eligible for Medicare. And these have no asset limits. If these are the only programs you are on, there is not an added benefit for an ABLE account. This is income from working. And there are, again, ways to work and maintain benefits. That's another thing I'm very passionate about talking about as well. So I have this little slide that I think breaks it up a little bit. I try to explain it a little bit. Really what I find is it's the SSI, the Medicaid, especially if I'm finding a lot this year, over the past year, if somebody had a part-time job and they got laid off from COVID and they were getting that enhanced unemployment, which was more than they were making. I've seen a lot of individuals have the balances in their accounts, really start to increase. And of course you can spend it on whatever you would like, but it is a good idea to consider an ABLE account. Here, there's Medicare and Medicaid. Eventually, most individuals, if they're on SSI and Medicaid, will be eligible for Medicare as well. That is because if someone is on SSI, when a parent retires, becomes disabled, or passes away, they're entitled to part of that parent's benefit and then will be eligible for Medicare. Medicaid is state specific, and so every state's a little bit different when it comes to Medicaid. Any questions? And yes, there will be a test. I know I went through that part a little, fast. So these are the benefits that are valuable to protect. So if you have 20,000 in a bank account and you would otherwise be ineligible for SSI or Medicaid, an ABLE account is a great option. If there's any questions on benefits, if not, I can jump into the ABLE accounts.
Yeah, I'm not seeing anything
Okay, cool.
in the chat or anything, so
I will just take that as I explained it amazingly well. So there are no questions. So what is an ABLE account? I think it's probably the most misunderstood vehicle out there. And what the background is, so it's Achieving a Better Life Experience Act, and it's a tool for saving with special needs. And they're tax advantage savings account for individuals with disabilities. They allow you to save without affecting the benefits, which is a very good thing. Now, the asset limit, $1,600. Connecticut's so broke, we require $1,600 limit, not $2,000. Most states are $2,000. I didn't edit that part, so it's $2,000. So, but income from does not impact the eligibility for the benefits. So if an asset, if you get some money, 10, 15,000, you're working and you would like to save for, I know someone's saving for a therapy dog, an apartment, house, car. Prior to that, it's really hard, if not impossible, to save. One of the best things, in my opinion, about an ABLE account is the power that it gives the individual with the disability to be able to spend the money. With a special needs trust, for example, I would need to ask for Kathy for the money, then Kathy would have to give it to me. With an ABLE account, the individual owns the account. They can use it for gas, groceries, credit card, on what they would like to spend it on. Speaking of what you can spend it on, so there is a list of qualified disability expenses. I find this is the part that people get hung up on the most, and it's the part where we should not get hung up on the most. So what they're saying is that the money in an ABLE account has to be used for a qualified disability expense, and those expenses are very vague on purpose. I have found less than I can count on one hand examples where I was able to say, I don't think you should use an ABLE account for that. That doesn't sound like a qualified disability expense. If you can justify it, you are good. You're all set. I mean, who in the world couldn't say that a vacation is good for mental health, right? There's a computer, car. If anyone I like to try to stump me. If you want to pay something in the chat with an expense, try to find one that you would think about that would not be qualified as a qualified disability expense. And again, very, very rarely do I find one. So I'll give it a second or
Andrew,
minute.
I do have
Yeah.
2 questions that came up.
Perfect.
One of them was they want to know if there's any way, the possibility to get the slides, because it's, they want to be able to have this information. Is that going to be a possibility? I did tell them it was recorded and available on Facebook.
Yeah, absolutely. I'm happy to share this information. I can email the slides afterwards. If this is recorded on YouTube or whatever, then I can post it on mine, send to me afterwards. But you missed my really fun commentary if you only have the slides. So, I mean, that's a little disappointing.
And then the other thing that came up was they're asking about the ABLE accounts. Where may the money come from? Social Security, possibly from gifts or from other earnings from a job?
I'll get there. Good
You'll get
question,
there.
though.
Okay,
I'm
great.
almost there. Yeah.
Okay. And then let me see, there's one more. Let's see here. Sounds like the ABLE account that the individual with special needs has capacity to handle money and balance a checkbook. It will not work if the individual is unable to do so. Executive functioning. I guess they're just relating to executive functioning and being able to handle the ABLE account.
Correct. But at the end of the day, it's still owned by the individual. I actually do have some tips on how to help with that as well, and somebody else can manage it.
Okay.
So
Good.
do we have anybody stumping me on trying to think of an expense that would not be a qualified disability expense? I'll give an example. There was a Catholic group home, et cetera, in Hartford, Connecticut. And they asked if they could use the money to build a gazebo. And that I really, maybe a ramp if the person was in a, wheelchair, but the gazebo really wasn't for them. There's really no benefit. The church needed a gazebo. One time when I gave that example, the individuals from that provider were on my presentation. So that was fun. But no, if you can make a rationale in your head, then use it.
What about if it's a support animal and for dog grooming?
Absolutely, 100%. So know people who do that. That's a great use for an ABLE account. So, okay, who is eligible? Individuals with significant disabilities. Onset of the disability was before the age of 26. Given this is the Autism Society of Maine, if you have autism, you had autism before 26. You had autism no matter when you were diagnosed. So for example, I have an ABLE account. I was diagnosed after 26. And I am eligible because, well, I was on benefits at a time for other reasons, but because my disability occurred prior to being 26. Something else I'm happy to send is if anybody is not on any public benefits yet, if you are, you automatically qualify. But let's say you're applying for SSI, and in order to apply, you need to have less money. That's a great reason to open an ABLE account beforehand. I do have a sample template letter. It's the same one I used to get my ABLE account approved, and I whited that out for everyone. So happy to share that. Very easy. So there is some talk of legislation to make it so individuals who the disability started later can have an ABLE account. I really don't see the desire for that, but I'm also a little biased that almost everyone I work with that doesn't affect, right? Because the disability started prior to 26. The other thing to know is ABLE accounts are also called 529As. A college savings, if this sounds familiar, is called a 529. So they're really modeled after the existing college saving laws. So that's another reason why I don't necessarily see the big motivation to get it approved for individuals who are older. But that is something that's currently pending. It can be established, again, beneficiary, parent, legal guardian, agent under durable power of attorney. If anyone is a rep payee or has a rep payee, the individual can help manage it, but not open it. Here's the part where I find a lot of people get mistaken, and that is an ABLE account. You do not current in Maine and federally, you don't get a tax deduction for putting the money in. If Social Security says you can only make $13.10 a month, putting money in an ABLE account will not reduce that. Again, putting money in an ABLE account will not lower income. It will only shield assets from, example, that $2,000 asset limit. The money does grow tax-free as long as the money's used for a qualified disability expense. One other important thing about the qualified disability expense that is not talked about often enough is it's only the money it makes has to be used for a qualified disability expense. So for example, you put in $10,000 and the interest it makes is $10,100. You take out the entire account. Only 100 of that $10,100 technically has to be used for a qualified disability expense. So when you also phrase it like that, it can be a lot more liberal. I don't want people not to put money in an ABLE account because they wonder, well, is this a qualified disability expense? I don't think DSS or the IRS or really anyone even knows qualified disability expenses. It's liberal on purpose. If you can make a justification, go for it. I think one of the best uses or one of my favorite uses for an ABLE account is if anyone has had or heard of what's called a UGMA or UTMA. Grandparents would open, like those savings accounts for, a child. And it's called this because it's in the individual's own name. So it's those, again, accounts, usually the grandparents put a CD in the bank is usually what I see. And what happens is if someone is turning 18 and looking to apply for SSI, then the money in the UGMA has to be spent in order to qualify. With an ABLE account, you are able to put the money in there and not have to worry about having too much money in a UGMA. Of course, if you would like to spend the money, that's your prerogative as well. But it's never a bad idea to save on a tax deferred, tax advantage basis.
Would now be a time to ask a couple questions that are coming in, Andrew?
Perfect.
Okay.
Love it.
So one question that was coming in is, and I think you kind of answered this, but I want to make sure, if someone is a guardian and the guardian also is the payee for an adult with special needs and SSI money, they are not able to use this, right? I think that's their question. Or are they due to this is a separate type of an account outside of the payee type of an account? So I think she's getting towards the payee part and how that connects.
If you're both, then I would just have it as not a payee, like as a rep payee account, right? I think that would solve the problem. And I said that you can that a rep payee can help manage an ABLE account, but remember, not even open one. So you would open it as the guardian, and then you would just never mention that you were rep payee. I can double check on that. It's a good question. And for the rep payee, it was kind of a gray area for a little bit. Many believed that it was fine, but Social Security hadn't really ruled either way. Again, additional clarification has said it's okay, but that's what I would do. Open it as the guardian, because opening as a rep payee just isn't an option anyway. So.
All right. And then I have another question from, let me see here. This is a case manager asking a question. A case manager for a young woman with autism who is not an SSI or an SSDI recipient. She's working part-time, is a college student, and is receiving waiver services. So she's either under 29, 21. I'm worried that she will lose her main care. In Maine, we like to call it main care. It's Medicaid benefits due to the high amount of money she has in her savings account. Would she still be eligible to open an ABLE account?
That is the absolute perfect example to open an ABLE account. You almost can't think of a better one, in all seriousness. Now, because she is working, she is able to contribute even more, and I'll get into that in a little bit. That is, again, I think the perfect example of an ABLE account being useful. So to maintain those waiver services, absolutely. And again, SSI is not as important as the waiver services. So.
Okay, and then I have somebody who started a 529 account for when my son was born in prep for college. He was diagnosed with autism at the age of 2. What should I do with this account at this point? It's unclear to them that if it will go to higher ed or not. So this is a 529 account they started when their child was born, and now, so.
I'm getting to that one soon too. So
Okay,
I'll just move right along. But
Yeah.
Are there any others? No, those are great questions. And actually, the one with the rep payee and guardian, I had to think about that one. I don't think I've gotten that one before. So whoever did that, thank you. That was a really good question.
There's another rep payee one here.
See, okay.
And I am the only payee for Social Security, and it doesn't state anything in the guardianship documents for other finances due to no other income source at this time. So this connected back to me. I'm the one that was the payee, but they opened an outside account. Is he able to do so without me? It's not a payee account. It makes sense if he doesn't work. And then wait a minute, I'm trying to connect it. And I am the only payee for Social Security. It doesn't state anything in the guardianship documentation about other finances.
Is the individual able to open the account on their own? Online, it takes only, 15, 20 minutes, or with your assistance?
Is he able to do so without me?
Or no, with the person there, would the individual be able to sit at the computer and go through?
Yeah, it doesn't say that here.
Okay.
So
Well, no,
maybe-
that's what I was, asking. You should, you should be able to open it as the guardian. And then if you want to email me that specific question, because I want to be 100% positive, I will forward that to one of the state ABLE, accounts and get a really good answer from the state treasurer's office. I'm kind of curious. I'm pretty certain it's okay.
Yeah,
But
I'll have the, all the comments in the chat
yeah,
box, we'll get to print out, so we'll get to
yep,
reply to some of these.
yep. But
Okay.
that one specifically, anyone can email me. I'm pretty sure it's okay, but I'd worth double checking. I think this first time might have been like potentially stumped. So yay. Okay. So you don't pay taxes on the money that grows in an enable account. I don't find that's a big motivating factor. It's really to help qualify for benefits. Now, there's a few important things to consider when it comes to the ABLE account. So first is, again, there is income tax and a 10% penalty on the earnings. So remember, if you put in 10,000 and it's 10,100, you took it all out, you didn't use any of it for a qualified disability expense, you would owe taxes and penalty on $100, not the entire amount. There is what is called an SSI suspension rule at 100,000. So you may commonly see that you don't want more than 100,000 in an ABLE account. Let's go to the example with the individual who is receiving the waiver services, who is not on SSI. Well, you can suspend the SSI if you're not on it. I really don't care, right? Take away something I don't have. That's fine. Medicaid, there's not the $100,000. So there is not that upper limit. I see very few ABLE accounts that get close to that dollar amount anyway. But for that individual in the example where they're not receiving SSI, but they are on Medicaid or a Medicaid waiver, and then it can be a benefit and they can have even more in an ABLE. And if you do have more than 100,000 and you are getting SSI, they just won't pay you until the account goes below 100. You don't lose it. One of the biggest, well, it's a drawback, or people at least really think it is there's what's called a Medicaid payback provision. This is similar to, which we'll get into in a little bit, first party special needs trusts. So what this means is if there's $50,000 in the account and the individual passes away and the state has paid for Medicaid services, then the state is entitled to be paid back first before any other beneficiary can get the money. So I think that's one of the reasons we don't get a lot of money in ABLE accounts. And again, that's only if the individual who has the ABLE account passes away before another beneficiary can get it, the state is reimbursed. So that Medicaid payback is something that exists, but it should not stop an individual from doing an ABLE account. Some states in the country do not have a payback provision, such as Pennsylvania or Maryland.
I think
And
Maine is one of those, Andrew.
is that part of the legislation too? Are we there and we just don't have one?
Yeah.
So it doesn't matter where you open one then. So I think so. Yeah, it's which is a good thing. So thank you for that. I guess that's why it wasn't on my radar, because it's also not, we don't have one yet. But for example, I know someone in Connecticut who opened one in Pennsylvania thinking then they wouldn't have the Medicaid payback. It doesn't work like that. It's the state. So it doesn't matter where you open it to be eligible for, if there is no payback provision, if that makes sense. So I recommend, most people use one or two of the same states, which I'll get into momentarily. And again, even in Maryland or wherever, we still recommend those, and there isn't the payback. How much can you put in an ABLE account? 15,000 a year, unless the individual is working and not doing a 401k. It's a little bit more than 26,000 a year. I rounded here. So, and again, that's if the individual is working and not putting money into a retirement account. then they're able to put in more money. Now, to go back to that example of the 529 college savings plan, I have two pieces of advice. So the first is that if it's not what's called an UGMA or UTMA, the UGMA, UTMA, that we went over previously, because you can have a 529 in one of those, but if it's not one of those, then the 529 plan is owned by the parent, which means according to Social Security and the procedures and operations manual, which if you want a really fun time, you can read, it's free online. They state that the 529 is the asset of the individual who owns it. Think of it this way. If you have life insurance, somebody is the beneficiary. That is the way to look at a 529 plan. So because that person's only the current beneficiary and that can be changed, a 529 does not count towards those benefits and resources because the parent could change it to someone else's name, their second cousin once removed. It's a pretty liberal definition of family. So that's one important thing. The other is you are able to move money from a 529 to a 529A, but you still have to stay under the cap. So if you have 100,000 in a traditional college savings plan, you can still only move 15,000 a year. If the individual is filing their own taxes and income is lower, there is a tax credit, not a deduction, called the saver's credit, up to $2,000. And that you can qualify for with an ABLE account as well. So that is a great example of if somebody has lower income, but even if they're not on public benefits, they can get some free money for contributing money to an ABLE account. It's eligible for the saver's credit. So are IRAs, Roth IRAs, but ABLE accounts are also eligible if the individual is eligible. Any questions?
I have one, Andrew, that came up,
Sure.
and it doesn't pertain to all of this per se, but they were asking about when Maine's going to start with their ABLE accounts. So just to let everybody know, Maine has been working on ABLE accounts here in our state. We've been working with Bangor Savings Bank to get this accomplished, and then COVID hit. So that put a little stop on everything because they had to revert everything to a different area. And I did contact them within the last 2 weeks. They told me that they have picked back up on the ABLE. They are starting to continue to work on it. And as soon as we get more information and when those are going to open here in Maine, be looking on our website. We'll make sure to get that information out. But I wanted to make sure everybody knows that we are working on that here in Maine.
So I want to pause and I want to say, everyone, do not wait on Maine. Okay. I'm going to give you a couple reasons. One is there is no advantage to the in-state program. Zero, none, other than there in theory should be some more education around it. In Connecticut didn't even really announce it much because we were kind of like Maine, just like too embarrassed that it took us so long. So we actually weren't last in the country with something. So thank you, Maine. And there are other states with probably other advantages as well. Kathy, if you're in the position to talk to them, I really not a fan of the ABLE accounts that do a local bank, like a Bangor bank, because there's debit card features. And one of the things that I've noticed with, let's say, Florida's or Virginia's ABLE programs is the debit cards don't work everywhere, which to me it's a Visa debit card. It should work everywhere, right? That's not true with all the states and all the debit cards. So the last thing you want is to need gas and to spend it and have the money for gas. And if you have a ABLE account from Virginia, the debit card doesn't work at a lot of gas stations. So that's a benefit that's not commonly talked about. So Kathy, any power to advocate for them to consider not using a very local regional bank, I would encourage, and they could talk to me. But anyway, regardless, that is something that I've noticed and a reason to also not wait. There's going to be no advantage. So for example, my ABLE account is in Massachusetts. Fidelity, and then my favorite is Ohio, and that's the stable account.
And people can open their accounts in other states. That's because we have that happening now in Maine, where you could reach out and open it wherever.
And a slide or two, I'll go through. I'll have the links up here, and I'll go over the pros and cons of my two favorite. That really, there's probably no reason to consider any others, honestly. So they're the ones I recommend. So how to fund an ABLE account, however you can get money to them. You can move money from another ABLE or a 529, check, direct deposit, automatic contributions from a payroll. Employers can also work to potentially set them up. Although there's no rule that you can't have SSI or SSDI directly deposited into one, we don't recommend it for paper trail reasons. Additionally, there could be an accident where the individual accidentally contributes too much to an ABLE account. So I would instead recommend a certain day of the month comes out of a bank account into the ABLE account, but you can do it. Like my wife likes to tell me all the time, just because I can do something doesn't mean I should. Okay. So with transferring an ABLE account from one ABLE to another or a 529 to another, takes a little bit of time. There's a form to fill out. If you need help, I find that the department of these investment companies that might be about the best is the one that helps get money over to them. So they're usually helpful if you need a form, a recent statement. One thing to also mention is there can only be one ABLE account on an individual. So for example, one parent can't open an ABLE and another parent open an ABLE. There can only be one ABLE in existence on that individual. Again, the exception is you're opening one to transfer to another state for a short period.
And isn't it true, Andrew, that if somebody wants to contribute to an ABLE account, they can contribute up to 15,000, and if it's 4 people contributing, it's still top 15,000, not 15 per individual?
Correct. And that even counts moving over from a traditional 529 into an ABLE, it's still at 15,000. So again, unless you're working over 26. Okay. So I'm going to go over the pros and cons of 2 states that I would suggest opening an ABLE account with. Massachusetts, Fidelity has an ABLE account. The pro is there is no fee to open. There is also no maintenance fee. If anyone uses Bank of America, you know what I'm talking about. I like to make fun of Bank of America. Anyway, and if you have Fidelity already, it's really easy to open because Fidelity already has your information and it's much easier. So if you're not sure how much money you are going to put in the account, you want to fund it with $100. Every other state available to a Maine resident would have let's say a $30 maintenance fee. Well, that'll eat away at $100. So that's a great reason to consider Massachusetts / Fidelity ABLE account. And, back a few hundred years ago, Maine used to be part of Massachusetts anyway. So it's basically like an in-state program, right? Okay. The cons are the investment expenses are higher because Fidelity is actively managing, trying to pick stocks. That's a whole debate whether they're able to do better and warrant their fee. and that debate's old as time. I would not worry about that as much. It's something to consider. It's not a high fee, and they try to make up for it. They do have a cash money market option, but it's not FDIC insured. So if you are, a provider, a rep payee, guardian may prefer to have the FDIC insurance, there is still something called SIPC to cover investment accounts and the investments inside of there. The last con that can actually sometimes be a pro, per an earlier question, is that it's a little bit harder to spend the money from an ABLE account at Fidelity. You have to transfer the money from the ABLE to Fidelity's free checking or debit account. Talking about impulse control and executive function, right? It actually, in a lot of ways, can be a positive to maybe need to wait some time in order to spend the money. So I actually will recommend Fidelity because it's actually harder potentially to spend the money. Only takes a day or two to move it from the ABLE to the Fidelity checking debit card. Fidelity's debit card and checkbooks are also free. So it's a good option. That is what I have. The second option is Ohio. That is stable account. Ohio had the first ABLE account in the country. They provide the ABLE accounts to lots of other states as well, the back end. They have an excellent system for keeping track of expenses with the debit card. I find them just about the easiest to use. Also, from a customer service point of view, if you call with questions on the debit card is usually handled separately from the ABLE account. So it's a different department, or it's the traditional 529 department handles the ABLE as well. So when you call, they really don't know what you're talking about. With the stable account, and Ohio's a great state for individual disabilities, not saying Maine isn't, but Ohio, I find, is if you call, you need help, they're able to help you all right there. You don't need to call a different number, right, for the debit card help. They only handle the stable account. So it's probably my favorite option. And again, keeping track, categorizing the expenses, you think of like a credit card, American Express bill that categorizes it. There's potentially a maintenance fee. So for some lower balances, and the dual guardianship thing, I've only ever seen once ever. So I wouldn't worry about that, but I wanted to fill out the cons. So here is the two links. I'll leave this up for a moment. Again, very, very easy. 20 minutes, maybe 30. Open it online. If you prefer paper, Ohio definitely does not have paper. They are only online as far as the application's concerned. So I think Fidelity is the same. I've never been asked, but that would be a reason to another state if you don't have even an iPad or phone. But then again, if you're attending my webinar, I would hope you would have access to something. So that is, I'm going to leave these up for just a moment. Does anybody have any questions? I'm going to compare a little to special needs trusts, and that's the last third part.
I think you've answered most of the questions that are on our chat. Somebody wanted to know if the withdrawals are only taxed if they are not approved expenses. That was true, right?
Correct. And again, remember, it's only the money that it made as interest or investment that could have that. The money that you put in would not be taxed or ever penalized. And the definition is very vague on purpose.
Okay.
Good. So I get there's a lot of comparisons to a special needs trust and an ABLE account. And I hear a lot of, should I open an ABLE account or a special needs trust? And what is the difference between an ABLE account and a special needs trust? And like any attorney's favorite phrase is, it depends, but I'm going to go over some basics, pros and cons. So there are two basic types of special needs trusts. I'm going to go over both of those, compare and contrast. They exist very similarly to, an ABLE account to help qualify, maintain government benefits. There are two versions: self-settled, also called first party, and third party special needs trusts. A first party self-settled is where it's the beneficiary's own money. So the example I would like to use is, it's always better to get somebody else to pay for lunch than you. It's always better to get someone else's money rather than your own. So for example, Kathy took me out to lunch. We had lunch and she gave me $50 to then pay for lunch. Well, I got the money, so it was my money. If I didn't spend that, it would have to go into, in theory, right, a first party because I touched the money. However, if Kathy just pays the waitress directly, I never touched the money. It was never my money. So that is the difference between a first party and a third party. And just remember, if you're a little confused, third party, it's always better to get somebody else to pay for lunch, right? So that's the way I look at that. There's a couple differences. The main one is the first party special needs trusts do have that Medicaid payback provision. They are also approved by the state. They have some more restrictions. The majority of the time we see those is, let's say there's a car accident or a legal settlement, or things were not set up appropriately and an individual was left money and then they needed to open a first party special needs trust in order to maintain and qualify for benefits. The third party special needs trust can be established two different ways, in a will or separate. But the two most important things is, one, there is this payback provision. And so that is a very important thing about third party special needs trusts. They are also a lot more flexible in the discretion of how the money's able to be used and what it can be used for. Just a lot more flexible, if that makes sense. So again, when possible, you always want a third party special needs trust. It's not always possible. It all depends on the situation. So I find, to answer a question in advance of getting it, that most people will have an ABLE account and a third party special needs trust. And that is 100% a good idea, the way to go. You could have an ABLE account, a first party, and a third party. The question is, what are you looking to accomplish? What are you looking to do? If someone is looking to leave lots of money to an individual, it's probably not the best idea for an ABLE account. Maybe for some, but think about an ABLE account is best if it's the individual's own money, or, for money that's not going to be a, let's say, significant amount as well. But you do have the option. Again, generally, I see that people have both. And what's really nice about the ABLE account is that with a special needs trust, the individual needs to ask money, right? If I have a special needs trust and Kathy is my trustee and I want money for food and I don't have any money, I have to call Kathy and ask her for the money. With an ABLE account, I can just go spend the money on food. So I think that is a as someone mentioned before, it could potentially be a negative depending on the person and the situation. But I do think it's very empowering and important to allow individuals to have some financial independence. And it's also a good way to, even if you don't think the individual's responsible or you don't think you can handle it, to also use that to try, right? So for example, if you load up a few $100s and it's gone, well, then it's gone. Um, I also, the other advantage to third-party trusts is you only need one of them if they're set up in a separate document, not a will. If you want to know more about this in a fun time, book an appointment with an attorney. They're usually less fun than I am, and that doesn't say very much. So, but if there is a grandparent, parents are divorced, if they all had them in their will, I know a situation where an individual has 6 trusts from different wills and how they were left, etc. If it is a separate document, a standalone third-party special needs trust, then you only need one special needs trust, and individuals can leave the money in there. My most common recommendation is, if there's parents and grandparents and the grandparents are asking, get the grandparents to pay for it, and then the parents can use it too. So, but they're part of an estate plan, and there are pros and cons. Again, an ABLE account versus special needs trust, but there is, it all depends on the situation. Special needs trusts also have their own accounting, their own tax situations. Again, somebody needs to manage the money, somebody needs to approve it as well. So for especially smaller amounts, you want to take money in and out, a special needs trust is not the best vehicle for that. Here's some other really fun things to consider. If this presentation was not enough fun for you, people should consider these things. I have that there. And of course, support decision making. Maine has a good site for that as well. And this is the end. So if anybody has any questions, I'll go back to the beginning of the slide and leave my information up for a little bit. I am happy to answer anything.
We did have one question. Somebody came in a little bit late for the presentation and missed the very first slides, but wanted to ask, who gives the approval for the expenses? Where's that come from? Who does that?
Well, if we're talking about the special needs trust, it is the trustee of the special needs trust. If we're talking about,
yeah.
So there is no approval. There is just, if you were ever asked how the money was spent, you would need to say it was used for a qualified disability expense. That's the law. You should always follow the law.
Mhm.
I've never seen anyone asked.
I was going to, who would ask? Would it be the bank, the institution, the
IRS or somebody? Yeah, again, I've never seen it. It's liberal on purpose. But you are supposed to save receipts and things like that. Ohio keeps track of that really well too. Again, I can't
Is it like
yeah.
the internal revenue where you have to keep things for like 7 years? Is it that a good motto, or is it lifetime?
It's definitely not lifetime. I think more than 6-7 years. I think that's plenty. So, you could, again, save the receipts. I wouldn't. I very much encourage people to use the ABLE account and not use it because of that.
Mhm.
So don't let that hold anyone back.
Yeah. And I think, when it's interesting, because I think as I myself am a parent, I have a 26-year-old individual who still lives with me at the house. And we always think about their future and how they're going to be able to, either care for themselves, or if they have to be in a situation where they're living with somebody else. It's nice to know, I think, for a parent to think that there is something out there, money in some sort of an account that can have their needs met more than what we see currently happening in these situations. So for me, that's what I think about is I think about, geez, he goes through iPads quicker than normal people. He uses his iPad often, and we're always having to buy one like every couple of years. So I think of things like that. So
Again, perfect example. iPad absolutely qualifies, right? Not even a question. And if you want a fun example with expenses, there's tons of IRS stuff there. Like you have to report the value of items you steal unless you return them within the year. If you ask the IRS, I'm pretty sure if it's a calendar year or 1 year from when you steal it, I'm pretty sure you get on a list. But no, I'm saying that there's a lot of these rules there, and they should be followed. But keep track of some receipts, or if you're using a debit card from a state like Ohio that keeps track of the expenses really, really well, then that's fine too.
hasn't the maximum that you can have in the ABLE accounts, isn't that up to like 400,000?
Yeah, it's about 400,000 or so. I think I've seen maybe only a handful that are over 100. And I've seen hundreds, if not thousands plus ABLE accounts.
Is there, this is something that came up with a prior conversation I was having with a parent, but what if is there any expenses that for you taken out? Let's say you have $100,000 and 1 year, 50,000 was taken out. Can they do that? Or is there a limit to removing? It doesn't matter as long as they're legitimate uses for the individual.
Yep, you can. I mean, a great example would be if somebody's buying an apartment, house, condo, right? Something, taking out a large sum is perfect. So absolutely, there's no limit to how much you can take out.
Let me just see if there's any other comments here on our things.
And I'll just go to.
I don't think there's any other comments from Facebook Live neither. Let me see here. There's another. Can a power of attorney use the money for the individual?
Assuming the individual has power of attorney in general to be able to use the money. Yeah, the answer is yes. So not all power of attorneys are able to use money. So
yeah. So yeah, I think it's having these conversations is important because it is very confusing. I mean, just going through these slides that you had, it's still, I have to stop and think and say, okay, we're talking about a 529 versus a 529A and the difference between that. And these systems, acronyms and things are thrown out all the time. So it's nice to break it down and have them look at it. And what we'll end up doing is if you give us the PowerPoints, we'll post them so people can actually have something to look at, because I think it does require you to go through it again, and it's going to be recorded and it'll be available for people to look at all over again. So because you're a wonderful entertainer along with the presentation.
Well, thank you. So, and again, my website does have lots of good information, planningacrossthespectrum.com. I have lots of blog post information on ABLE accounts, among other things. And I would say if you're unsure of whether or not you should open up an ABLE account, it is never a bad idea to save some money on a tax advantage basis. So do not wait for Maine, because even when Maine
You'll be waiting forever.
Yeah, exactly. And again, I've been through this, right? Yeah. Actually, I think I helped Connecticut speed it along by going around tour with the ARC of Connecticut and doing all the presentations on ABLE accounts. So because there isn't going to be an advantage for waiting to Maine, I'm still recommending, even though Connecticut has theirs, to these same states as well. There's some states you have an advantage for doing their ABLE account. Maine there's no advantage. There's no tax deduction for traditional 529s either. So again, it doesn't matter which one you use.
Another question just came up was, does Social Security need to be notified when you open an ABLE account?
No, they don't. Would it be DSS or, they may ask on some requalifications
Yep.
for, how much money you have, et cetera. And the money in an ABLE account is excluded, but no, they don't need to know if you're opening one.
And
And
is,
again, oh, sorry.
are the accounts transferable to another account? I think we talked about that, where you can take it from one ABLE and transfer it to another ABLE.
Yeah, it's a little bit of a process, and
Yep.
you can only have one ABLE account at a time. So,
Right.
they're all really so similar. That's why I go for like the one that's just easiest to use.
Yep.
There aren't that many. So even like Connecticut is part of what's called the ABLE Alliance. 20 other states are together. So there really isn't that much a difference.
So another question that came up that I don't know if you can address or not, but it actually came up at a board meeting that we had last night where they were talking about the ABLE accounts. I was reminding everybody we were doing this today. And when an individual is filing their own taxes, there's a spot on the taxes that talks about the ABLE account. And isn't there something within that, if they're need to pay back money or something, they can take from?
Well, there is what's called the saver's credit, which if the
Okay,
individual has a lower income, think of it almost like a match or a grant. So it's not a deduction, it's a real credit. It is up to $2,000 depending on the individual's income level.
Mm.
So an IRA, Roth IRA, ABLEs, those qualify.
Yep.
So that's a great thing to consider as well. If someone is filing on their own taxes and they're otherwise eligible for the saver's credit, that's a no-brainer. It's free money.
So I don't see any other questions. I don't know if you have anything you wanted to add, but I do thank you, Andrew, for coming on and doing this. Like I said, ABLE is, it's been around for a while. Yes, Maine's not there, and yes, people can open up in other states because they are available. It is really worth a parent, at least for me, I'm thinking of it as a reassurance that, my son will have something that I know I've put aside, trying to get him what his needs are going to be when I'm no longer around. So,
And again, if anyone has any questions, even though I'm a financial planner and I do, charge fees, manage money when it comes to ABLE accounts, I just want to help as many people open them as possible. If anyone asks me for help with an ABLE account, this isn't something where I, charge fee. I just want to help as many people as possible open them. With that being said, too, ABLE accounts, financial advisors can't do, with roughly one or two exceptions. They're really something that you just do on your own, and it's better, less expensive. So again, do it directly. If you go to the bank or ask the financial, advisors, a general rule, they can't do it. There's maybe like one or two states where they can. But anyway, I just wanted to throw that out there too. So although it's good to ask for assistance, currently at the moment, it's not that easy for advisors to help. I am working on making it easier. So,
well, thank you, Andrew, for coming on. And I think this was very beneficial. And I do think that it's going to help a lot of families understand the difference between the ABLE and between trust, special needs trust, and to move forward in planning their son or daughter's future.
yeah, absolutely. Thank you so much for having me.
Thanks a lot. Bye, everybody.